Straight to the top story this evening, the United States and China have agreed to call ceasefire on their current trade war for 3 months. Now, the breakthrough happened on the sidelines of the G20 meeting in Argentina. China's foreign ministry claims that both presidents have told their economic teams to work towards removing all tariffs. In fact, Donald Trump took to Twitter to say that China has agreed to reduce and remove tariffs on U.S. cars. Remember, currently China is imposing a 40% tariff. Trump also postponed the additional tariffs worth $200 billion, which were to take effect on the 1st of January. CNBC's Eunice Yoon reports from Beijing on the trade truce and how China is reacting to the news.
Well, right now it looks as though the Chinese are waiting and watching to see what the U.S. does, and that the two sides are going to get into these negotiations and try to figure out whether or not they can work out their differences. So from the White House's perspective, according to their statement, the talks are going to center on some of the issues that the Americans have had problems with the Chinese, what they've described as unfair trade practices, forced technology transfers, for example, as well as non-tariff barriers and cyber theft. The Chinese, though, have are painting it in a bit of a different way, where they haven't ever acknowledged that they engage in these types of practices, and instead say that the focus of the discussions are going to be more on opening up, on market access, on ways in which they could buy more American goods. So that's more of the focus of those discussions. And because of the fact that the two sides haven't really been so aligned in the way that they are presenting this information, there's a lot of speculation now that the two sides are going to have a really rough go in trying to come up with any sort of agreement in any timely fashion to continue to keep the optimists happy that perhaps the two sides would be able to reach some sort of agreement.
Absolutely. Thank you so much for all those details, Eunice. Today, Finance Minister Arun Jaitley made a fresh pitch calling for open borders. Addressing an event in Delhi today, Jaitley stressed that cross-border trade is an economic imperative of the present times and it will only increase in the days to come. He also said that it was in the interest of every country to bring down the trade barriers. Take a look.
In terms of countries, no nation can produce and manufacture all product. It can't specialize in all forms of services. And therefore, trading across barriers of nations is the economic imperative of all times. And this is going to increase with times to come. It is in the larger interest of every country to make sure that trade barriers are brought down to the extent it is possible. And when trade barriers come down, obviously it also has a significant impact as far as transactional costs of transactions are concerned.
And geopolitical events have given a huge push to crude oil prices. Signs of peace between United States and China in their ongoing trade war sent the black gold soaring. Brent is up over 5% since yesterday and is currently trading at that $61.82 per barrel mark. And NYMEX is at that $53 a barrel mark, so also up about 4% in trade. Now, the second factor that's driving oil prices is the hope that oil producers will agree to a cut in production at the meeting slated on the 6th of December. Remember, the OPEC has been reduced to a 14-member group after Qatar decided to exit from next month. Qatar has been a member of the OPEC since 1961. It is leaving the group to focus on its liquefied natural gas production. Moving on to Dalal Street, where markets failed to sustain at higher levels after a gap-up opening. The benchmark indices, that's the Nifty and the Sensex, ended flat with a slight positive bias. The Nifty is still just shy of that 10,900 mark, while the Sensex gained a modest 46 points. The Nifty Bank underperformed slightly and ended in the red, while the mid-cap shone bright, gaining 0.75%. The government is planning to tighten its purse strings besides aiming for a higher direct tax collection in order to meet its 3.3% fiscal deficit target for FY19. This, even as government data that came out last week shows that the government has already breached its full-year fiscal deficit target. Sapna Das, who broke that story, joins us now. Sapna, what is the government's game plan?
Well, we are given to understand very clearly that the government will manage the fiscal deficit target of 3.3% in FY19. That's a broad sense that we have got as of now. Very quickly on the expenditure side, certain savings are expected on that front. Around 20 to 25 odd thousand crores is the broad envelope, and the reason for this is that most of the ministries probably are within the demands and within the budget estimates that have been put out at the beginning of the financial year. Any additionalities from big ministries, say for example rural development asking for additional funds for Manrega, that probably will be met through internal accruals. Similarly, in terms of additional subsidy burden, probably something on fertilizer, the earlier rollovers, the earlier demands, and of course something coming in additionally on LPG and kerosene side. We are given to understand that a part will be deferred, a part of the payment will be deferred to March sometime FY19, and the remaining will be rolled over. So that's broadly the sense that we are getting from expenditure, that more or less in line, and internal accruals and savings will help them meet that side. The worry probably is on the revenue side, and the GST story is well known. It's well below the strike rate, 6 to 7 odd thousand crores worth of monthly gap. Probably the compensation cess kitty, which is already above 55 odd thousand crores and will reach around 90 odd thousand crores by the end of the financial year, probably that may come to the government's rescue in terms of trying to bridge the GST gap. And we are also given to understand that given the healthy trend on direct taxes so far, some additionalities may be asked on that front in the last quarter of the financial year. That is basically the target may stand revised upwards. So this is what we're given to understand in terms of the overall fiscal maths, the balancing that is being done by the government. It's a combination of all factors, but we have to wait and watch and see what really happens over the next month and a half.
Absolutely, Sapna. Thank you so much for those details. Moving on, we told you first, and now it has been confirmed. Consumer goods giant Hindustan Unilever has bought Horlicks for $4 billion, and the deal will be completed within a year, subject to all approvals. Nisha Podar, who has tracked that story from day one, is with us. Nisha, take us through the deal contours.
Well, thanks for that. It's a large transaction in the FMCG space, and I would have to say that it was a very hotly contested one as well. 3 MNC players have really been deliberating over it for the last many months, and finally, Unilever, the big boy, has used its richly valued stock to really strike this deal. Remember that Nestle, which lost out in the race, was offering an all-cash deal, but HUL stock and the richly valued that it is has really struck or helped it clinch the deal. So what we do gather in terms of the contours that has been announced between the two companies is that it's a 31,700 crore rupees transaction in which GSK Healthcare really comes to HUL as part of the merger process. Now, in this share swap, it will take about a year. 5.7% of the stake in the merged entity will be with GSK. It also has a huge cash component, and here Unilever's might has really come behind this transaction. 566 million pounds is what Unilever is going to pay as cash to GSK globally for the brand Horlicks, which is owned overseas, and also for some of the global businesses like Bangladesh and 20 other countries in which Horlicks and Boost is sold. So that's net the total transaction. What GSK has done is that chosen a higher valuation and a share swap deal for the richly premiumized share valuation of the MNC companies in India versus an all-share deal which would have been at a much lower cost. Here, a few things to watch out for also would be the brand sale overseas. Will it really arouse a debate in terms of the taxability over here? Will the shareholders, minority shareholders, question that? And on the other hand, the OTC products of GSK Pharma and other group companies of GSK, which will be distributed by HUL as a competing company for 5 years, how will that really go ahead?
So we'll have to wait and see what happens with that. Thank you for those details, Nisha. In fact, David Redfern, the Chief Strategy Officer of GSK, addressed the media just a short while ago, and here's what he had to say.
This is a great deal for GSK PLC shareholders, but also importantly GSK Consumer Healthcare shareholders here in India who are getting a premium. And also Unilever and Hindustan Unilever is a fantastic company. Clearly here in India they have a very famous heritage and fantastic distribution capabilities. So we're delighted, having owned these brands for over almost 100 years, to divest them to Unilever and Hindustan Unilever, and we hope they can take them forward for the next 100 years.
The shares of India's biggest pharma company tumbled to a fresh 6-month low today to go over 7.5% lower in trade. This after reports suggested that market regulator SEBI is set to open an insider trading case which dates back to August last year. SEBI initiated this action after a whistleblower alleged lapses by promoters and other entities. Archana Shukla, who has been tracking that story, joins us now with more details. Archana, tell us about this case and what did the whistleblower allege exactly?
The allegations by the whistleblower are pretty serious in nature. But before that, the August 2017, the insider trading case where Sun Pharma, its managing director and 9 other entities had settled an insider trading probe paying 18 lakh rupees as settlement charges. This was reportedly to do with the Ranbaxy transaction that year. Now, this could be up for a review by SEBI if we go by the reports, and it will be based on a 150-page document shared by a whistleblower with SEBI that alleges serious irregularities like inadequate disclosures about the company's links with banned traders like Ketan Parikh and Dharmesh Doshi, related party transactions, the role of promoter Dilip Sanghvi's brother-in-law and co-company director Sudhir Walia, his independent financial operations, and how certain individuals have booked notional losses to save on tax payments. It also talks about certain opaque FCCBs. A foreign brokerage report had recently highlighted alleged governance lapses too. Some others had looked into the annual reports of the company and questioned the rise of certain related parties and related party transactions in the company. Now, these are pretty serious in nature as if we talk of the allegations. The company is doing a call at 6:30 in the evening with the investors, and we are hoping to get some answers on these.
So some bad news coming in there for Sun Pharma, but we'll have to see what comes out of that conference call. Thank you so much for those details, Archana. Now, moving on to the auto sector, companies declared their November readings over the weekend, and it was a largely mixed set. The slowdown was led by commercial vehicle segment, which saw a fall of 10 to 20%, but the two-wheeler and tractor segments outperformed. Bajaj Auto, TVS Motors and Escorts were the front runners. Sonia Shenoy joins us now with a detailed reading. Sonia, sub-sector specific movement has been seen.
Well, the picture does look bleak. So in the month of November, the big takeaway really is that the numbers have been weak overall, but the big pocket that has disappointed is commercial vehicles. So if you look at Tata Motors, Mahindra and Mahindra, or even Ashok Leyland, the sales have fallen quite a bit. For Tata Motors and M&M, the CV sales are down in excess of 20%. For Ashok Leyland, it's down less than 10-odd%. And, all the commercial vehicle makers indicate that there is pressure on the small operators. So the small operators' profitability has been hit quite hard. Not just that, we're also seeing demand significantly slow down in the MHCV space. The LCV space, the light commercial vehicle space, is still doing quite well. Now, in the two-wheeler space, Hero MotoCorp has hardly seen any growth this time around. But on the flip side, we've seen both Bajaj Auto and TVS Motor report good growth in excess of 20-odd%, indicating that the two-wheeler pocket is still looking good. But the silver lining really is the tractor growth. Escorts has reported a very good growth in tractors this time around. In fact, the 3-month average is about 50% higher than what they've seen in the preceding 3 months, and the management indicated to us that the going is quite good. Also, Maruti, the growth rates have slowed down substantially for Maruti. This is because of a slowdown both in exports as well as in the mini car segment. So all in all, you'd have to say it's a mixed bag for the auto sector this time around, but the big trend really is the fall that we've seen in commercial vehicle sales.
Absolutely, Sonia. So tractors and two-wheelers doing well, but the commercial vehicle segment not doing so well. Former Chief Election Commissioner O.P. Rawat has said that demonetization has proved ineffective in tackling the misuse of money during polls. In an exclusive interaction with Network 18 just 2 days after his retirement, the former CEC said that a record number of cash recoveries this poll season indicate that the note ban had absolutely no impact on black money.
Actually, my limited statement was that so far as it relates to seizure of cash, liquor and freebies being distributed in the election process, there has been hardly any impact on the rising trend on these seizures. Now, seizure alone is not the comprehensive indicator whether abuse of money in elections is on the same level or is rising or is going down. Immediately after demonetization, there were 5 state elections and seizures there went up. So even at that time, the commission said that as far as seizures of money and freebies, liquor, etc. are concerned, there has been no impact of demonetization on that.
And shifting focus to France now, what started off as a peaceful protest against recent tax hikes on fuel has escalated into a full-blown civil unrest, the worst that's been seen in decades. French President Emmanuel Macron has now ordered his prime minister to hold talks with the demonstrators in a bid to quell the protests. Juliana Tattlebaum has the story.
Last night, President Macron held emergency talks with his interior minister and several top security officials to try to forge a response to the protests that have taken place over the last 3 weeks. Now, things have escalated, as you say, from what started as a peaceful protest online with no real leadership has morphed into one that is marked by clashes, violent clashes here in Paris. Just behind me at the Arc de Triomphe, there was graffiti written on Saturday calling for President Macron's resignation. So what started as protests against higher fuel costs, specifically amongst peaceful protesters, has become this anti-government, anti-Macron sort of revolt. Now, in terms of the response from the government, they have stopped short of calling for a state of emergency, despite some reports earlier that that would come of the meeting last night. Now, President Macron has asked his prime minister to hold talks with the protesters, but as I mentioned, this is a movement that started with no leadership, which makes it quite a volatile movement and potentially hard to isolate. Now, in terms of the economic and political impact that these protests may have, from an economic perspective, it really depends how long the protests persist. So far, consumer confidence in France has already taken a severe hit, dropping to its lowest level since February 2015 in November, with survey respondents citing really the same concerns that the protesters are airing, and that is concerns around higher unemployment and faster inflation on the back of higher fuel costs. So, and politically, President Macron already under a huge amount of pressure with his approval rating dropping to 26%. So huge amount of pressure on Macron, and in terms of economic impact, still too early to tell.
So anti-tax protests are escalating in France.